Hi guys, welcome to a simpler approach. If you are new to the channel, please consider subscribing, liking, commenting, and sharing this video. In today's lesson, we will be looking at one of the topics that in my experience is quite dreaded by most of my students. But in this video, we will try our best to simplify it in such a way that you will realize that if you are also one of the persons who dread this topic, you'll realize that it's pretty simple. That topic is bank reconciliation statements. Let's get started. Our primary objective for this lesson is to garner an understanding of the concept of bank reconciliation statements. Okay, that is our only objective for this lesson. Now, to get to that place, there are some things that we must iron out first. All right. Number one, bank charges. What is bank charges? Bank charges refers to the fees that a bank charges the customer in order for their account to stay active, in order for their account to work. Okay? That's number one. Number two, standing order or direct debit. That is where a business gives instruction to a bank, and this is a business or an individual, gives instruction to a bank for the bank to pay a specific amount to a specific person at a specific time. Okay? You can go to the bank, you can set up a standing order to pay your rent, your mortgage, or an existing fee. So every month when that time comes, the bank releases the funds to the listed person. Okay? That's number two. Number three, unpresented checks. Unpresented checks are checks that have been paid out by the business, meaning we have written checks and we've given them to suppliers or whosoever. And those checks have been recorded in the cash book of the business, but those checks have not yet been taken to the bank by the receiver of the check for it to be encashed. All right? So that's an unpresented check. Check that is written to a supplier or somebody that the business wrote the check to, but the check has not yet been brought to the bank to be encashed. Okay? Late lodgement is the flip side to the unpresented check coin, so to speak. So late lodgements are checks that we have received, the business have received, probably from debtors, but we have not yet brought those checks to the bank, to our bank, for them to be lodged or placed in our account. All right? Credit transfer or direct credit. This is where a payment is made by a customer to our bank account. Okay? Now it's direct credit. So the customer, instead of paying us cash, they have just transferred the funds to our bank account. All right? Now, these things we must know and understand first before we can even begin to dive into the concept of bank reconciliation statements, especially as it relates to how they are drawn up. All right? So now that you have an understanding of these terms, we can now begin to look into bank recon, what it is, the situation that causes its relevance, and where to go from there. All right? The concept of bank reconciliation statements. Let us reverse a little bit and then go forward. Okay? Cash book. You are aware that the cash book records all receipts and payments of cash and checks. Okay? So anything related to cash, check, anything monetary related that comes in or goes out of the business is in the cash book. Cool. The bank account at the business would be reflected in the cash book. Because once again, we said everything that comes into the business, whether by cash or check, is in the cash book, which means the bank account at the business, and you see me putting in quotations, is what should be reflected in the cash book, in the bank column. Cool? At the bank, the actual bank, there are some transactions that directly affect the business's account on a day-to-day business. Now, there are some transactions that the bank would not know about, and there are some transactions that the business would not know about. Or even if the business know about it, it is not yet in the business's cash book on the bank side. So what we find happening here is a situation where, for the main reason of time, the bank account in the cash book at the business and the bank account at the bank, they are not saying the same thing. The balances are different because things happening at the bank that the business don't know about and things happening at the business that the bank don't know about. Okay? And until time has passed where some form of communication takes place between the two, then there would not be a situation where X knows about Y and Y knows about X. You follow me? Cool. So, in order to bridge that gap, in order to bring the two together, make them equal, make them agree, make them par, you need a statement that would allow that to take place. And that is the purpose of the bank reconciliation statement. It's a statement that is drawn up to reconcile the bank statement and the bank column of the cash book. And by reconcile, we mean allow the two of them to be equal. All right? That's the basis, that's the concept, that's the background of what the bank reconciliation does and what its purpose is. Cool? Cool. Now, there are two formats to doing the bank reconciliation statement. This is format 1. I call this format the everything format. And I call it that because, as you can see there, everything is placed in it. Some of you might be used to the updated cash book approach. This is not it. Everything is placed right there. All right? So you have the balance as per cash book, meaning the balance that comes from the bank section of the cash book. Add unpresented checks, add credit transfer or direct credit, subtract late lodgements, standing orders or bank charges. And if there are errors, sometimes errors take place. A little money missing here, a little money missing there. X was overstated, X was understated. Whatever the error is, sort out the error there, and depending on what the error is, you either add it or subtract it. And then when that is through, you will have the balance as per bank statement. All right? This is the full one. Oh, by the way, I must tell you, the reason why unpresented checks are added to the balance for the cash book is because of the timing difference. This situation would not yet have been recorded at the bank, which means that the bank balance would be higher. Now, because of that, in order to level the playing field, you add it to the cash book balance. Let me say that again. The check has not yet been presented to the bank, which means the bank's balance is higher than the balance of the cash book. Therefore, to reconcile, to balance it out, to level it off, you simply add it to the cash book balance. All right? The opposite applies for late lodgement. The check received has not yet been lodged to the bank, which means the bank's balance will actually be lower than the cash book balance. So to balance it off, you simply subtract it from the cash book balance. All right. So this takes care of format 1. All right. Everything one place. Format 2 looks like this. You recognize it's much simpler. That is so because the cash book is updated first. Okay, so you recognize direct credit, direct debit, bank charge. You realize all those things are out. Why? Because those things would have been placed in the cash book first. And then after the cash book is updated, that is why you see here balance as per updated cash book. Because putting information in would mean that the balance of the cash book would change. Okay? So you'd use the updated balance, sort out your unpresented check and your late lodgement, and the errors, if any, and then you come to the balance as per bank statement. To provide a better interpretation, a better understanding of what we're doing, we're going to be using an example. One example, but we're going to do it with the 2 formats. All right? Okay, so this is our example. An example for preparing a bank reconciliation statement can be given to you in 2 ways. This one that you're seeing here, a cash book extract and a bank statement, or it can be given to you in worded format where you have to read the transactions and interpret them accordingly. Now that one is easy. This one has a little trick to it, so we've decided to use the hardest one. All right. Now this is how you perform this one. There are items in the cash book that is not on the bank statement, and there are items on the bank statement that is not in the cash book. Okay? We're going to start with the cash book, and we're going to start with the debit side. If you analyze the debit side of the cash book and the bank statement, you would recognize that there are some items in the cash book that is not on the bank statement, and there is some on the bank statement that is not in the cash book. Now, 88 is in the cash book and the bank statement. 73 is in the cash book and the bank statement. But these 2, they are in the cash book, but they are not on the bank statement, on the deposits side, that is. All right, cool. Let's look at the credit side and match it with the withdrawals side of the bank statement. 349 is there. 33 is there. But 115 is not there. Okay? Cool. Let's jump over to the bank statement. What are the items that are on the bank statement that is not in the cash book? 22 and 54. So we have a credit transfer that is in the bank statement but not in the cash book, and a bank charges of $22 on the bank statement, not in the cash book. Now when you are doing this type of example, you must do that first. Single out the items that are in the cash book but not in the bank statement, and the items in the bank statement but not in the cash book. Okay? You have to do that first. Now, credit transfer bank charges. That's straightforward. But you must identify what the 115 is for E. Marty and what the 249 for D. Saunders and the 178 for M. Barrett, what those are. Now, where the cash book is concerned, it can either be unpresented check or a late lodgement. right? Now, unpresented checks are checks that are paid to persons but have not yet presented the checks that they have received. So if it's checks that are paid, it must be on the credit side, which means E-Marty represents an unpresented check. Now, if E-Marty is the unpresented check, then it means Saunders and Barrett must be the late lodgement. Okay? And that is why in the beginning, when we were looking at terms to know, that is why we looked at these things first, so that we are able to manipulate them and pick them out accordingly. All right? So, once again, E-Marty represents the unpresented check. A check that was given to E-Marty, recorded in the cash book, of course, but has not yet been taken to the bank by E-Marty to be encashed. Saunders and Barrett gave us checks, but we have not yet brought them to the bank to lodge them to our accounts. Okay? Cool. Now, having done this, we can go ahead and perform our bank recon. Now, format 1 would look like this. Remember that with format 1, everything is there. No updated cash book is done. Everything is in one place. Okay? And as you can see, I've placed A, B, C, D, E, F just to give an explanation as to what these things are. Now, briefly, A represents the balance that is taken from the bank column of the cash book. All right? B represents unpresented check. We spoke about what that is. A check that was written to E-Marty but was not yet been brought to the bank to be encashed. Now, naturally, that would have been written on the credit side of the cash book, but is not on the bank statement. All right? The same thing applies. The same concept applies for credit transfer. All right? Customers transfer funds to our business account, but we don't know that it is there. All right? Until we would have got the bank statement and we would have seen it. All right? Now, that is on the bank statement, but it would not be in the cash book. All right? Late lodgements, checks that have been received by us, but we have not yet gone to the bank to lodge those checks. All right? And bank charges, charges that the bank place upon us in order to keep our account running. All right? And naturally, that would have been on the bank statement, but it would not be in the cash book until we have acquired a statement, seen it and then take care of it accordingly. Now, the balance as per bank statement comes from the bank statements, the final figure in the bank statement that represents the balance in the account. Now, watch this. 1,551. That figure that you calculate at the end of the bank reconciliation statement must be the same. Let me backtrack a bit and show you. See it right here? Let me just use the cursor and show you. 1551. So this 1551 and your answer that you calculate at the end of your bank recon statement must be the same. If they are not, it means your bank reconciliation statement is incorrect. Simply put. All right? And remember, that statement comes from the bank statement. So if you're saying here balance as per bank statement, but then when you look at the actual bank statement that you were given, it's not the same, something went wrong. It's incorrect. All right? So this will be format number 1. Format number 2 would look like this. First thing we did with format 2 is to update the cash book. Take the items from the bank statement that is not in the cash book and put it in there. And there were just 2 items, the credit transfer of $54 and the bank charges of $22. And remember, double entry is taking place here, so you would have to reason it out properly. Credit transfer represents funds that was deposited to our account. Naturally, we're receiving money, so that would be a debit entry. Bank charges, we're paying money to keep the account running. Naturally, that would be a credit entry. There you have it. Totals thus far represents all the items that were originally in the cash book, with the exception of balance CD, because balance CD is going to change because we are now adding stuff in it. So naturally, balance CD is going to change. All right. And you start the bank recon statement with the updated balance, which is now 1,863. Take care of your unpresented check. Take care of your late lodgements. This example doesn't have any errors, so this pretty much would be it. And once again, balance as per bank statement 1,551. You would come back to the same response, to the same answer rather. All right. Now, that's it. That's the bank reconciliation statement, made as simple as possible. All right. Now, I hope you enjoyed this video. I hope the information was clear, precise, to the point. I hope that if you are one of the persons who dreaded bank reconciliation statements, I hope this video helped you to recognize that it's really not hard. It's pretty simple. As long as you understand the dynamics between unpresented checks, late lodgements, items that are in the cash book but not in the bank statement, and once you decide which format you're going to use, if it's the full one or if you're going to update the cash book and then do the recon statement, then everything remains pretty simple. All right? It was an honor to serve you. Did you enjoy that video? Then please consider subscribing, liking, commenting, and sharing. And as always, if you have any questions, concerns, queries, anything you want to tell me, whatever it is, let it out in the comments section below, and I will respond to you directly. Until next time, walk good, stay safe.